Most people don't understand that the markets move in a market cycle. But for the traders who do understand this market cycle, trading has become very easy, very relaxing, and very profitable. So in this video right here, we're going to point out how to be able to spot the market cycle by using the 21 EMA, which is the most powerful indicator you can use. And once you can see the market cycle, your eyes will be opened. Let's go deeper. Hey guys, how's it going? JD here. So in part one of the most powerful day trading indicator, we talked about the 21 EMA and how you can use it for market direction. So today we're going to talk about how you can use the very same indicator, the 21 exponential moving average, to help you see the market cycle. Okay. Many of you may not have any idea what I'm talking about right now, but last video I said that if you can't tell the direction, you're dead in the water. And that's very true. And also, I mean, if you don't know which way the market is going, how do you know whether to take a short? How do you know whether to go long or go short, right? You have to have at least a educated guess on which way the market is headed. So the 21 EMA not only gives you just a plain direction of if prices are above the 21 EMA, we're trending up. If prices are under the 21 EMA, we're trending down. If prices are moving sideways and the EMA looks like a roller coaster, that's a range, right? But let me tell you, there's another piece to this that can really, transform your trading. If you are not familiar with the market cycle, get a piece of paper out, okay? I get people ask me about this all the time. Here it comes, the training you've been waiting for. All right, because if you can see the market cycle, if I can open your eyes to the market cycle today, quite possibly, you will never trade the same again. Or if you've been struggling, this may be the moment that the market I once was blind. But now I see. This is a I once was blind, but now I see moment. Okay, the market cycle, people. Here it is. The market moves in a very predictable fashion. Any market, futures, Forex, binary, it doesn't matter. Okay, if you study a price chart, you will see this. The market move. Here it is. Here it comes. Here's the market cycle. Trend break, retest to high or low. Okay, so let's talk about going long. Here's the market cycle. You will get a trend up, right? A trend break. Now I just use the 21 EMA to see this trend break. If you want to use a trend line, maybe you see it even clearer, okay? But you're going to get a trend up, trend break, then a retest to new highs. That is the market cycle. Okay, now let's talk about going short. All right, let's talk about selling. You will get a trend down, trend break, retest a new low. Okay, that's the market cycle going short. All right, now there's something else in here also called the rule of two. Let me just throw this in here just for extra love. Let me share some extra love. Now, many times the market moves in twos, so you'll get that trend up and then you'll get two legs back. Okay, then you get the retest, because see, that's four legs altogether, right? Because the market moves in twos. So going short, it'll be coming down, then you get one, two legs up, then drop. Four legs, the market moves in twos. Okay, so sometimes that's how the pattern will look, but it's still trend up, trend break, retest, right? Then sometimes it's gonna look like, trend up, trend break, but kind of rangy look. Kind of range, but you still got that break though in there, and then it take off, right? So unfortunately, it doesn't look exactly the same every time, but at the end of the day though, if you zoom out, sometimes you got to back out on this. it's still making the same pattern where you're getting a trend break retest. Okay, so it's gonna look different depending on the market. It just looks different, right? This is why you have to study. Okay, this is why you have to get your chart hours up. But I'm going to show you how to see it with the 21 EMA. And once you know to look for it, everything changes, right? Up until today, if you never heard of the market cycle, you had no idea of how to look for it. Or maybe I should say a price action market cycle. There's a lot of market cycles out there, but I'm talking about a price action market cycle. So this is the market cycle that price action traders use. Those of us who only use one indicator, the most powerful indicator, the 21 EMA. Okay, and maybe you use a 20 EMA or 19 EMA. I'm not saying that. I'm just saying use a moving average. Okay, I like the 21 EMA. I can slap it on any time frame. I've slapped it in any market. So I'm a 21 EMA disciple. Use whatever you want. Okay, don't ask me about no other indicators in the chat no. I don't know. I only use 21 EMA. Okay, if you want to try to combine it with something else, have at it. I only use the 21 EMA. All right. If you want to combine it with some other indicator, the CCI, the RSI, have at it. I only use the 21 EMA. Okay. So you don't have to ask me no questions about what I think about combining it with something else, because my answer to you is going to be, I only use the 21 EMA. Okay. Because the 21 EMA, it tells me everything I need to do. I trade from a clean chart, so we just talked about direction in the first video, right? After I have the direction, let me try how powerful this is, right? I already know the direction just off of the EMA. I already know what direction we're currently headed, right? Then when I combine that with the market cycle to know where we are in the current market cycle, that's all I need for price action trading. Okay. So when I combine those two, I know whether I should be going long. I know whether I should be going short. All right. Now let's say I'm going long. If I know I'm supposed to be going long, now I know to look for second entry longs and higher lows off the 21 EMA with trend. It's that simple. Okay. If I know the direction is going short, I know to look for second entry shorts off the EMA or lower highs off the EMA. And I know that I'm going with trend. Okay. So in either case, using the 21 EMA and understanding the market cycle tells me what setups I should be looking for. Okay. Then when they come, I take them with no hesitation. And that's it. And so that's how I trade that's how I trade with one indicator. Okay. That's how I trade with a clean price chart. That's how I trade, now I'll throw this in here though. We do, but some of you don't know, we have this special trade we take called the sweet spot trade. Now that trade, I will wait until it gets into the sweet spot zone, but I still know where we are in the market cycle, right? Because that sweet spot zone is happening right where we expect the retest to start. So it all goes hand in hand. Okay. Everything that I teach it all goes hand in hand. At the end of the day, it's all price action trading. And this is why price action trading is king. Okay. Because you can take this information and you can go to futures, you can go to Forex, you can trade binary, you can trade options. It doesn't matter. If you had a 21 EMA, you understand the market cycle, you understand how to slap a fib on to find the sweet spot, you can go trade anywhere. Okay. Because you understand what the market is doing. I hope your eyes have been opened to this one. Okay. The market cycle. Okay. So we're going to go to some charts so I can show you how you can see the market cycle with the 21 EMA. And after that, your eyes should be open and your trading journey should be changed forever. All right. So this is a great time to like, share, and subscribe. I greatly appreciate everybody for the comments, for the kind comments that you leave. I appreciate it. Make sure you hit that like button. All right. And so, hey, let's get some charts so I can open them eyes. Let's get it.
Looking for profitable trade ideas in the Forex market? Want to learn a unique strategy based on price action and Fibonacci retracement zones? Join our trading community now for just $10 a month and receive trade ideas and binary options chart markups straight to your inbox.
Okay, so we're on the charts. And what I'm actually going to do is I'm going to show you 3 markups that I submitted to the Swing Trading Titus community today. So these were the 3 markups that we put into the group, and those people who are part of the Swing Trading Titus community got an email, right away when these trade ideas was posted. But in these trade ideas, you will clearly see the market cycle. Okay, so all this stuff goes hand in hand with our sweet spot trade. So if we start at the bottom, it starts to the left of the screen, what's happening? All right, we got a butter EMA here. We broke higher here. It's a good chance we're gonna start trending. Boom, we do. We trend up, right? So we get a beautiful trend up. Then what are we always looking for? The market cycle is trend break, retest to new highs, okay? So we trended up. This is the high right here. I'm actually let's add some stuff here. So once we trended up, this is the high, okay? So we're looking for the break. So this thing ranged for a little while, then it finally broke, right? We're back under the EMA. So this is a trend up, trend break. We're under the EMA, okay? Now, after that, what are you looking for? A retest to new highs. Then we get a back above the EMA, we start pushing up. Now, it doesn't make the new high here. It kind of went into actually a larger range. See, the EMA is in the roller coaster. But then on the second attempt, because the market moves in twos even this way, boom. So on a bigger scale, from a bigger picture, by following the EMA, trend up, trend break, 1, 2 legs up to a new high. Once we broke here, that was a new high. Okay, so now this whole frame here, that market cycle is now over. So you probably could start, well, it's not time to go short yet, because who knows how long a trend will go. You see the EMA is pointing straight up, so you keep riding the trend at this point. But that was the market cycle: trend up, trend break, retest to new highs. That's the market cycle. Okay, let's take a look at another one. So Boeing. So we marked Boeing up today. All right. So we had this trend up. Okay. I marked this sweet spot. This was a toe touch, boy. But look, we trended up. Then this one really went into a range. This is the trend break right here, though. Prices are clearly under the EMA. So this is the trend break. So trend up, trend break. So where was the high at? Let's mark the high. The high was right here. This was the high. All right. So we got the trend up, made a new high, trend break right here. Then what do? We retested, boom, broke through it to new highs. That's the market cycle. Trend up, trend break, retest a new high. Trend up, trend break, retest a new high. Okay. Now the thing that can trip people up is that you want that to happen instantly, but it doesn't always happen that way. Sometimes the market trends up, goes into this range, right? This is why last week I covered range trading, because if you can identify a range, which in this case, look, the EMA is a roller coaster, that's a range. If you can identify the range, then you can wait for the breakout. And what did I say about ranges? What did we learn last week? If you trade up into a range, you can pretty much expect it to break out that same direction, and boom, there it was. If I put another horizontal line here, there's the range right there. Here's the bottom, here's the top. We traded up into it and we broke out the top. But also, this is a market cycle: trend up, trend break, retest to new highs. So the market cycle is the big picture. Okay, this is how you look at the market from a big picture and don't get caught up in all the noise. This is another reason why starting with the range is so beneficial, because you eliminate what the market can do, right? If you had this range boxed up, then you would have known, like, well, we traded up into it, let's wait for a breakout, and you get a beautiful one right here. This is actually a breakout pullback entry. Broke out, pull back, boom, huge candle out, go time. Okay, let's look at another one. Oh, great. We got one for shorts. Okay, so we had this trend. Look at this, starting up from here. We got this trend working down, right? And let's start from a range aspect, since we kind of on that today. Let's just say that that was the bottom. Say this was the top, right? So we was in this range, and then boom, we broke out. All right. So now we're trending down. Now let me take that off because it's kind of in the way. So then we was trending down. Then we looked for a pullback. We got it right to the sweet spot and dropped, bam. But it didn't keep going. It didn't make the new low. Look, it came up short, right? Came up short because well, let me grab one of these again. Here's the low. All right. So when we trended down, this was the low. So look, we're all under the EMA, trend down, trend break, and then we retest. But you should retest to a new low to have a complete market cycle, which we didn't do here. But man, I mean, there was a few wins right here though. But then look, it went into another little baby range, tried to go higher again, hit our sweet spot area again. Now it was game time. Boom, trend down. So trend down, trend break, retest a new low. So as soon as we hit cross the line here, bam, there's the new low. That is the market cycle, people. It happens all day, every day. In any market you trade, you can find the market cycle by using, again, our very, very, very good friend, the 21 EMA. All right. So the more and more you practice looking at the 21 EMA, the more and more you start to look at the market from a wider view, you know, zone out, back up, you know. I know you want to be candle by candle, but you only need to be candle by candle once you get to a area, like in the case of our sweet spot trades. You know, I don't really care what's happening until we get here. Then once we get here, then I'll start to look candle by candle, you know. But I'm going short, okay, because I understand the market cycle. So that's the true power of the market cycle. We have a good idea. It's never 100%, right? But we have a good idea of what's probable as far as direction. That's what the market cycle gives you, because we understand that the market moves at trend break, retest a new higher low. We can try to trade the retest, okay? And that's real safe because you're going off of this leg right here. You're going off of that. Hey, we're clearly trending down, right? I'm not going to go counter trend. I'm not going to get trapped trying to counter trend trade. I'm going to wait until I'm going to wait until it looks like the trend is about to resume, which is this second leg right here. Okay. That's how you do it. That's how you see the market cycle. It's all over the place. It's all over the place. And it works going long the same way as it works going short. Okay. Now look, it's even happening here. This market cycle was complete, right? Trend up, trend break, retest a new high. That market cycle is complete. Now the same market cycle is happening going short. Trend down, trend break. It's trying to retest the new lows right now. Right now, it's trying to retest the new lows. So it works. It works in the same way. So, you know, if you want to use this to trade, you know, my suggestion is you trade off of what's most current, right? You know, you look back a little bit, try to find a complete market cycle, and then you look forward and say, okay, what is the market doing right now? Right now, I can see this is a clear downtrend. This is very strong. Trend break, couldn't go no higher, did not make the new high. Now we're back under the EMA again. Yeah, go short. You go short, okay? And so that's how you find out what the market is currently doing. You use the 21 EMA at all times to read the market. And again, you can make it easy on yourself by finding the range, or if you understand our sweet spot trade, by finding the sweet spot and wait for prices to get into that area. Those two things, you know, help you stay out of a lot of noise, help you stay out of a lot of chop, you know, help you stay out of a lot of sideways markets by understanding where the range is, staying out, only fading the range, or waiting till you get to the sweet spot, you know, like we do in our swing trading tightness community. Wait till you get in the sweet spot, and then you know, yep, we're in a sweet spot. If anything look like we're going long, I'm taking it. So as soon as you get above the EMA here, you take it. As soon as you stay above the EMA here, you take it. As soon as you break out the sweet spot right here, you take it. Beautiful, beautiful. That was a run today. Look at that boy. Look at that boy. Great call on me. Great call by me today, I must say. Pat myself on the back. Pat. Good call, Jay. So yes, hey, if you don't know, the swing trading title community is thriving, and I put these chart markups up every day. And so, you know, until you can learn how to see the market cycle, use the Fibonacci, find a sweet spot on your own, hey, join the community and we'll help you. Everybody's sharing information, sharing trade ideas, and we're going to do it together. All right. So this is a great time to like, share, and subscribe. I greatly appreciate you. Again, this is how you see the market cycle with the most powerful indicator, only indicator you need, the 21 EMA. All right. So I'm signing off with that. I will see you guys Friday for part 3 of the most powerful day trading indicator. And we're going to talk about entries. So do not miss Friday's video. Come back and holla at your boy. All right. So my name is JD. And as always, I wish you increase on the Sutton. Bye-bye. If you missed part 1 of this series, watch this video right here and learn how the 21 EMA will help you with market direction. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye.